and market went up, how did you form that view? So these are the factors. There is no one factor that I am considering for forming that view. These are the multiple factors. And there are some day-wise pattern also. Like if you remember, June 19th, I posted in Twitter that market was very close to the all-time high. So Nifty was very close to the all-time high. It was just like 10-20 points close to the all-time high. Then I posted all-time high may not be hit immediately. It might take another 2 weeks, and monthly expiry, which is supposed to be on 29th of June, only the all-time high might hit is what I tweeted. And similarly, market came like within 10 paise of the all-time high, but it did not break the all-time high until that expiry day. And many people DM me and they ask me, how did you say that? It is simple behavior. If you look in the past also, you can see important levels are usually taken out on an expiry day, and mostly, if possible, it will be on a monthly expiry. And certain times, if it is not on an expiry day, it will be taken out on a gap up on other days. So that is the usual pattern in the market. If the important level break usually happens on a monthly expiry, or certain times it comes in a gap up. So those observations will help you certain times. It's not that, okay, it can happen only that way, but that is the probability. And I said only on 20, it may hit only on 29th, but there are chances that on the very next day also it might hit. So I'm not saying that it can happen only in that way, but I'm just giving the probability only. So yesterday I mentioned 13th June, this Thursday expiry can be extremely volatile. That is my expectation only. It may or may not happen. It is a high probability because 13th is the record date for HDFC and HDFC Bank merger. So there can be a lot of transactions, buy, sell. Some people will be offloading, some people will be buying heavily, some people will be adjusting their index funds. So we don't know how it can act. So it can go up, come down, it can move anyways. So that's why I'm expecting heavy fluctuation or heavy volatility. But there are chances it can move directional, it can be silent, I don't know. But the probability is high for the volatility. So what I'm tweeting or what I'm putting in the Telegram, it's all probability. It's not that it is what going to happen. No, it's all probability. So that probability can come or it cannot come. So it's up to the market. But probability is high based on my analysis. Okay, I think it's been 1.5 hours. So we have completed about 16 slides. We have overall, I think, 28 slides. That means 22 slides more pending. We will come into that next week. And I think I can take some questions. Maybe I will take 10 questions now and try to give some kind of answer during the remaining time. Then we will break for the day and come back next week. So Team Z is asking, how did you predict the Diwali target? So Diwali target is also not a prediction. So it is a crazy crazy number that I have given, 22,222. And but if you break down the Nifty, it's not a big deal actually, 22,222. So how did I do that? I'll tell you here. And if you hear when the proper breakout happens, let's say October 2020, there is a all-time high breakout. So it was like 12,600 or even 12,500. That was okay. We can take it as 12,600 all-time high break. November 17th. In next 3-4 months or in 6 months, it went to 15,000, 3,000 points, which is like 25%. And from there, again, in the past also multiple times. See here, after a correction, consolidation under the all-time high was broke out here. So that was like 8,900 or 8,900, 9,000. You can consider 9,000. Next few months, if you look at the peak, it is 11,100, which is like 2,200. That will be like 25-30%, right? Over 25%. So after a reasonable consolidation, when the market breaks out, typically I looked in the past multiple times, it is like 20% is like very reasonable. So 19,000 into 20%, which is like it is more than 20,000, 22,222. And Diwali is a time where the market comes very close to the peak, and it gives a crazy number which nobody expects. So that's the reason I gave that number. Now the way I expected the market broke out, still the FIAs and other people are buying the stocks, and still the momentum is positive. So even now I am firm on the target, but it is up to the market whether it can hit or not. So the accumulation was done all these places, and now the market is thriving. So let's see if it can come there, and if it doesn't come there, it doesn't come there. But I'm seeing a probability, and I'm giving that number. That's it. So OI Pulse, I think OI Pulse, there are tutorials available in OI Pulse itself, and YouTube. There are a lot of tutorials because I don't use too many features there. I use only few features, but YouTube feature, the tutorial is there. Questions are moving so fast, I'm not even able to read it. Okay. I think I need to copy paste. It's moving so fast. I'll open the Word file. So is analyzing price action on the option chart better than option chain analysis as directional option buy? See, analyzing price action in option chart, that is good. Option chain analysis is also good. You can't stick to one thing. You need to consider multiple things. Like option chain and option open interest also I consider. That is also one thing I consider while doing the market analysis. We can't say one thing is good and one is bad. Certain times one is good, certain times one is bad. I mean, some other thing is good. So I'm just copying what other questions coming in. Can you suggest some good mentoring course classes? I stopped it because I wanted to focus more on my trading. But suggest some good mentoring courses. I don't know because I'm not sure in a public platform if I can suggest something because I don't know. There are courses, but do your due diligence. Make sure that those people are somebody who is sharing the profit and loss to the attendees at least, and they are some people who got good understanding about the market based on their what to say public profile. And I suggest don't go with somebody who is fighting with each other for gaining the popularity or gaining the attention. Just avoid those people and find out the people who actually have the knowledge based on what you see in their social media profile and other things, and make sure that they at least share their uh, profits and other things. I don't share it because I'm not doing any paid courses or anything, so I don't want to because I don't want to share my P&L and all. And when I was doing the mentoring, I did share with the mentees. That is the first thing I did with every batch. What is your view on SMC concept? Yeah, see, SMC concept is there are part of SMC smart money concept is within the way I follow. Like there are a lot of things that I follow from the SMC concept, but I never studied SMC concept in detail, but I know the basics. But what I do is some of the those things are very close to the smart money concept, like swing high breaking and all those things are a part of the SMC concept. So I don't have any specific opinion about any one system. Okay, money management or psychological or risk management, which is having the heavy weightage, everything. Because if you don't manage your money properly, your psychology will get impacted. If you're not managing your risk properly, when the risk on a trade exceeds, your psychology is getting impacted. When you don't manage your psychology properly, you will not be able to properly manage your money and your greed and your expectations and trades and everything. So everything is interrelated. You have to focus on each of these things, not one. Okay. See, I took 976 trades in the past year and winning percentage was 71. But due to my poor risk management, my psychology and emotional control capital was washed out. See, poor risk management you can control with money management also. Like I mentioned, if you keep only specific amount and if you keep your capital constant throughout the period, your with 71 percentage, you will not be able to getting wiped out. But there is one more thing. It is not just about risk management. It is about the reward management also. You got 71 percentage of the winning trades, right? Out of 100, 71 trades were winners. But how many of those winners were like big winners? Imagine most of the trades you are taking small profits and you are getting 71 percentage winning ratio doesn't make you profitable, right? So that is the reason I said your winning percentage alone is not contributing to your profitability. Your risk reward, your risk should be lower than your reward. Your reward should be higher always. So not just the risk management, always focus on the reward management also. When you get a good trade, try to get maximum out of it. You will not be able to capture every bit of the move, but at least try to capture the meat of the move. That is very important. The questions are coming very fast. So I'm not even able to copy now. How do you come to a conclusion that index strong and weak within 5 minutes of opening? So depending on the current price action, like current trend, let's say, say Nifty, see, every day I'm not saying that within 5 minutes of opening. Only certain days I'm saying within five minutes or something the market is weak or strong or whatever, right? So that is all these things, all these market analysis has a part to play in that. Like the predominant trend which is happening currently and the price action after the movement or after the opening. Like based on what the global market or SGX was suggesting, how the opening is and how that price is holding after the opening and how the 1 minute candle is forming after opening. Like certain times you will see struggling. Like these things and all. If you look at here, let me see. See, market is opening here. Market is opening here, and it's a 1 minute chart. And I'm playing it. See, this here, it is fluctuating. See, then after that you see this. It is continuously making higher highs. I can very well say that it is strong, right? Because if you look at the past history, the market is very strong on the daily chart. Plus, after the market opening, it is like continuously giving the green candle without even a pullback, right? So those are the things. It is not just based on one fact. It is based on all the market analysis and all the market view and everything. Hmm. This is way too many questions. See, why don't you analyze the Fibonacci retracement for analyzing? Because any pre-calculated blind levels and numbers, I'm a little skeptical. I'm more inclined towards tested support, tested resistance, or the swing high, swing low. So that is the reason I'm not using the Fibonacci retracement, Fibonacci extension, Fibonacci retracement. I'm not saying that it's not working. It's not. It is not something that doesn't work or something. There are a lot of people follow that successfully, so it might work. But I'm more comfortable with what to say, swing high, swing low, tested support and tested resistance than Fibonacci. Artificial inspiration took nights. Okay, that's. Could you please talk about how to develop discipline, which is lacking most of the low losers? See, artificial discipline. Couple of things I can suggest now, and remaining things I will cover when there is a slide that comes in. One, do not look at your P&L. And if you need to ignore your P&L, your position sizing should be as low as like 2%, 1% of or whatever of your capital. If you are betting your significant part of your savings or whatever, you will not be able to focus on the trades. Instead, you will be focusing on your P and L. And probably if you read that book, uh, Trading in the Zone, you will get a better idea. More than your pain avoidance mechanism. When your loss is beyond what you can tolerate, you will not be able to book the loss because that loss is bigger than what you can afford. Then that loss will become even bigger when you're not booking it. But if your losses which you have already accepted before taking the trades, if that trade comes into loser, you'll be able to exit it. Like when I take a trade, what I consider is okay, if this trade goes wrong, how much I can lose. Then I come in terms with that money, that loss. Then if that loss comes or goes, I don't care. I can look at the trade setup and I can exit or enter the position. That's how it is. So in one of the interviews with Nitin Kamath, Zara the founder, I heard him saying when he meets, he's a people person, right? He's a founder, he's a CEO, so he has to work with a lot of people, with clients, customers, and employees. So what he said is when he see a new person, he will do a risk assessment. So if my relation goes wrong with this person, how much will be the potential loss that I may incur? Then I come in terms of that loss. Then I can freely interact with that person and I can freely do business or whatever with that person. That's what he says. That is the same thing that I do in trading. When I take a trade, I look at the trade and analyze if this trade goes wrong, what will be the dent in my emotion, what will be the dent in my psychology, and what will be the dent in my financials. If all these three are manageable, then I don't care about the money. I can care about the trade and trade setup. But if it is creating a dent which is beyond my control, then what I need to do? I need to reduce my position size to such a way that it doesn't impact me financially or psychologically. So that is what you need to do for bringing in discipline. Discipline is an outcome of what you do. It is not something that you can create. So discipline, emotional quotient, and all. It is in trading. It's an outcome. It's not something that you can bring in artificially. So whatever you do, it will bring it to you. Bring the discipline to you. Okay. So I think I'm tired continuously talking. Probably we can wind up the session for today, and I will schedule a follow-up session if possible next Sunday or whenever the time permits. I'll schedule at least one day earlier, and I'll send you the link in Telegram, and I will share that in what to say Twitter also. And guys, there is one thing I just want to reiterate one more thing once again. The Telegram channel. This is the only and only channel that I have. There is absolutely no channel. I can see a lot of channels in the name of Snowball, Shiju, Antony, and all, which is with the same profile picture, which is saying, which is offering so much of reward for investing money with them. Don't do that. I don't have any paid services. Don't pay money in my name to anyone. No courses, no paid services, no paid money management, nothing, absolutely nothing. So this channel also I just update my views and trades only, nothing else, no promotion, no money management, nothing. So just want to tell you because many people are messaging me asking me, is this your channel, this channel and all with so many fake channel names. So nothing is my channel. This is the only channel which is